Welcome back to the channel, guys. So we are back with another video, and this is a very important topic in your trading journey. So everyone who is in trading understands properly. All the professional traders, they always have a trading journal. So we are trying to do a video today about how to make your own trading journal even without any software included. So you can make your trading journal in your Excel sheet. So without wasting any time, let's start right away. So for example, we are going to use Euro USD here as our currency example, how to jot down all your trades in a trading journal and what are the key points to include in your journal. So for example, let's say you have opened a buy position at somewhere around here after the market has confirmed a change in trend, and you have closed it around there, somewhere there. So it means you have a 1.6 risk to reward ratio. And let's try to look at this to plot it in our journal. So you had something like let's see, you had something like 50 pips in your stop loss, in your risk, and you had something like 100 pips in your gains. So an order like this, you'll plot it in your journal. How? So we're going to go into the journal and we try to see what to include in your journal. So first thing, this is an Excel. I will put the link of this down in the description. So these are some of the major things you can include in your trading journal. First thing, you include your trade setup. What was the setup of that order? If you go back at this order, this was a breakout and retest. So it means in your trading journal, the setup will be a breakout and retest. And if you go and check what was the direction of the order, it was a buy. So you'll go there and you put in a buy order there. And if you come here, you look what was the risk to reward. The risk was 1 to 2 because you risk 50 pips and you're targeting 100 pips. So the risk was 1 to 2. If you look into the market structure, what was the market structure for that order? It was a trend. So it was a trend to the upward side. So that was the market structure. And then if you look at the result, it was a success. If it was not, what was the lesson learned? You comment there the lesson learned. If you fail to get the target, was it poor analysis? Was it entering without confirmation? Was it some fundamental issue about the economic indicators or anything? So comment there if you had any issue with the order. What lesson did you learn? And then you also note the emotional status and how do you actually comment on the emotions for that order. For example, you placed an order there. How do you comment on the emotional status of that entire time you were in the order? So on the emotional side, you always comment during the order and after the order. What happened emotionally with you? For example, let's look at the examples. Maybe you delayed to open the position because you are waiting to see a push to the upward side. It means you delayed to open the position because of fear. So fear is the emotion right there. Or your emotions were all good. You got a confirmation, you opened the position, and the position kept running till you take profit. That means it was all good. Sometimes we'll go with overconfidence. So you try to enter a trade without doing any analysis. So that will be overconfidence. If you fail in that order, the emotions were part of all the failure for the setup. So it was overconfidence. That's also emotion. In simple times, we'll say that's being cocky. So there is another emo. For example, your target was 1 to 2, which was 100 pips, while risking 50, but your target reached and you refuse to close the order, and the order ends up coming back after hitting your target. Now that on the emotional status, we'll call that greed. So it means you reach your target and you failed to close the order, and the order ended up, the market ended up taking back all the gains. So that will be greed. But if all are checked, it means that will be all good. So these are the 7 most important things to note when you're journaling your trades. So let's look at another example here. For example, you're planning to enter a trade. Let's say you're planning to enter a trade somewhere here. You're planning to enter this trade right here. Let me plot a buy. This is a short-term buy right here. So if you're planning to enter a short-term buy of this nature, what could be the setup? What could be all the points to note in your journal? For example, first thing, what is the setup of this order? This is a falling wedge. So it means if you go into your trading journal, it will be a falling wedge in the setup. So that the direction will be a buy. The risk to reward ratio will be 1.7 as per the plan of the order. The market condition will be a range, because the price is not exceeding here and it's not exceeding here. It will be a range, but the general trend is a downward trend, but the short term is a range. So the outcome could be a success if you target the supply where all this move came from, creating a range setup. The outcome will be success right there, and the emotional status will depend on how you execute the order. Are you executing the order exactly at the time, or you delay? And are you closing the order exactly at your take profit, or you want to capitalize on that to get even more? So greed will cut you off, and the price will come back exactly where you entered from, and you end up losing. And then all this will be noted in the journal, and after a couple of trades, something like 30-40, you'll have a bigger data set to start analyzing which are the good setups. For example, you have falling wedge. How many setups you have? You have 10. Breakout and retreats, you have 6. Trend continuation, you have 14. Rising wedge, you have 4. Double tops, you have 3. And retests in fair value gap, you have 19. Now after a month or after 3 months, you'll end up with a very good data set to analyze which are the best setups and which setups play around your emotions. It means those are a little bit risky, and you start using smaller lots on the setups that are not easy for you, and on the good setups. For example, here we have 14 trend continuation setups, and maybe you have all of them as success. It means try to use even more lot sizes. Try to increase the lot size on the good setups, and try to minimize the lot sizes on the difficult setups, or try to eliminate the difficult setups where you always challenged emotionally, or try to control this issue of emotions like greed and fear, overconfidence, closing early, this and this. Try to work on those to make these setups that are a little bit difficult for you to also become better. But this is where a trading journal will help you. You try to understand, in these setups they work better for me, and these setups they don't work better for me. This will help you focus on the better trades, and at some point you can even just abandon the difficult trades on your side, and you focus on only those that work better for you. So this is how a trading journal will help you improve trading in your journey. So that was our video about the importance of a trading journal and what are the main points to include in your trading journal. You don't need any trading software if you can't use any, or if you can't pay for any. You can use your Excel sheet and you note down all your trading traded orders, so that you can really analyze which is best and which is worst to keep improving, because it's a journey, not a marathon. So thanks for watching, guys, and keep it up. So if you haven't subscribed, please subscribe to the channel and hit that notification button so you get notified every time we post a new order. Thanks for watching, guys.